I'll be showing you something that you've never seen before from Palantir. I repeat, never seen before. This is from Palantir's past. It's its first commercial product, and I'd love to show you the demo of it today. Everyone knows today that Palantir has two core products, those being Palantir Foundry and Palantir Gotham. Well, little did you know, Palantir's original commercial product was known as Palantir Finance, which launched in 2008, which of course was a bad time in global finance and led Palantir to have a really slow start, with Joe Lonsdale citing potential customers as being too busy putting out fires to call back and work with Palantir. But they achieved a proven fit and had some really excited customers who switched over from market leaders a few years later, as well as a big partnership with Thomson Reuters. So let's have a look at this release. This is Thomson Reuters and Palantir Technologies entering an exclusive agreement to create the next generation analytics platform for financial clients. Now in this video, I want to talk about how Palantir's finance product got started, what it did, and what it morphed into, as well as if Palantir has the technology to predict where stocks end up if Palantir is using that, and if this actually could turn into a commercial product in the future. This video is brought to you by Masterworks. More on them at the end of the video. Let's go. So Palantir built a business in the area of global finance with 9 figures in revenue over the next 5 years after its 2008 or 9, 10 launch, around there, with the product's goal being a true buy-side financial platform with network effects. They didn't want to use a sales model, applying their team and technology to finance and commercial endeavors alongside their other efforts in a way that aligned with their core operating model. The company was able to scale beyond government. So Palantir ultimately had a very favorable start with Palantir Finance, and Joe Lonsdale states that the team was pivotal to the company's business and mission, but the product was a little too complex and heavyweight, and they went to building rather than building a little bit and then getting feedback on that product. But the system that they were building, that ended up being called Metropolis after the Palantir Finance days, turned into this object-oriented way for analysts to approach the world and ask questions about economic and macro concepts directly the way they think about them, doing studies in minutes that previously took days. So let's dive in and talk about exactly what this was. Here's Palantir Finance right here, revolutionary technology, unparalleled analysis. Very early days for Palantir. Their applications provided a suite of financial tools to connect to databases and software engines to pull upon historical and real-time prices, 10K fundamentals, earning estimates, and option values, all coming from separate data sources automatically mapping to what you are working on. Palantir Finance was for hedge funds, mutual funds, funds of funds, banks, and everything in between. And this is what I really loved about this, is Palantir was able to serve really everyone in finance with this product. Of course, they didn't end up delivering it to everyone, but when Palantir sets its sights on something so large, it's applicable to so many. This is what I think a B2C product that could circle back in the future could be. So talking about traders, getting answers in minutes where other systems would take hours means you can swiftly react to market events, quickly find other times when similar events occurred and see how they played out, track your portfolios, monitor dashboards of important instruments, and get notified when your daily indicators trigger. So of course, there are other services that do something similar, but I think Palantir, as you will see in the demo coming up, provided something truly revolutionary in the way it tied everything together, and you really could break in to whatever you wanted analysis-wise to do. Evaluate your strategy's profitability over different periods of time, calculate its volatility and Sharpe ratio, drill down into each transaction to see if certain types of trades were more profitable than others, quickly measure how altering your trading thresholds would have changed profits, simulate hundreds of strategies simultaneously and compare their results side by side. Test your trading hypothesis. Should you buy every time a stock's RSI falls below a threshold? There's so many what-if scenarios in this, and I'm going to show you the demo that actually explains a certain what-if scenario with gold, which, if you think about it, is what Palantir has bought last year. 2021, Palantir bought $51 million worth of gold bars. Was this video I'm about to show you a premonition? You tell me. And when they talk about their chart dashboard, they say add or remove elements from the chart quickly and easily as you explore data and develop ideas for further analysis. When you're done, save your ideas for later retrieval and share them with your team effortlessly. Analyze which members move the index the most. Use your indices across the platform and across your organization. Aggregate instruments however you choose. use and watch instruments fall into and out of your index. Really, Palantir is powering a lot of these what-if scenarios once again. So I want to provide you with this demo that I was able to uncover. This was way back when Palantir was just getting started, when they called it Palantir Finance, before they even parlayed it into Palantir Metropolis, which ended up getting wound down and being the rebirth of Palantir Foundry. But I think understanding this history for Palantir is really important as investors, and also I think it's really cool, and I think it's something that could come back again in the future. Here it is.
We will look at trading the pair GLD versus GDX, where GLD is the ETF that tracks the spot price of gold, and GDX is an ETF comprised of the stocks of gold mining companies. By normalizing the stock returns on our chart, we can quickly see that gold stocks don't always track the spot price of gold. The reason being is that at certain times, gold stocks become more affected by general stock market fluctuations rather than the price of gold, even though fundamentally speaking, the company underlying a stock is extremely dependent on gold prices. From March of 2008 to December 2008, when gold prices went down 27.5%, the gold stock ETF went down over 70%. Our hypothesis before running further analysis is that a strategy exists to take advantage of these opportunities. We will continue our research by doing a regression. This will help us determine how potentially mispriced the stock market has made the GDX ETF relative to the gold spot price ETF GLD. If we regress GDX onto GLD, we will gain an understanding of how much the GLD price is explained by the GDX price. Analyzing the residual of the regression will tell us how wide the spread is between GLD and GDX on a particular day. We add the symbols GLD and GDX to the current regression workspace and run the regression over the same time frame. Now that we have the variable set up properly, look to the right-hand portion of the screen for the results. The regression results panel shows us the coefficient of the regression. More specifically, since we ran our regression using the actual prices of GLD and GDX, this coefficient tells us how many shares of GDX we need to trade relative to one share of GLD. Now we need to run a co-integration test. This tells us whether the GLD-GDX spread is stationary, which is a useful metric when judging candidates for a pairs trade. Here in the regression tool, a simple way to accomplish this is by running a unit root test on the training errors of the regression. The t-stat of minus 3.26 gives us confidence that indeed the GLD-GDX spread is a stationary time series. Now that we have confirmed the viability of using these two ETFs in a pairs trade, it's important to think about the next steps required to best test the historical performance of trading this strategy. But these values are likely going to change drastically over time. So if we want to test a trading strategy using this concept, we will need to recalculate these values every day based only on data we know prior to that day. Luckily for us, the Palantir software makes these calculations extremely easy. To accomplish this, we simply set up our regression to use a rolling window. In the Test tab, type in 60 days. This tells the software to run the regression and calculate the coefficient and residual of the regression every day based on the prior 60 days. Now we can use the Chart app to show how much the coefficient changes over time by plotting this time series of the regression that we just did using the 60-day rolling window. This allows us to see how many shares we would need to trade of GDX relative to GLD shares depending on the particular day of trade might be entered. Most importantly, we want to plot the rolling residual of the regression to see how it changes over time. The variation visible in this plot is the spread we will attempt to profit off of with this pairs trade. Notice how frequently the plot of the residuals oscillates from high to low. This tells us how wide the spread between GLD and GDX can become at times. To make the oscillations more apparent, plot a moving average on the chart, as well as some Bollinger Bands. The movement from the extreme points relative to the moving average is what our pairs trade will attempt to capture. From a visual standpoint, it looks like our hypothesis could be true, and that a strategy should exist to capture a portion of these oscillations that consistently occur. This is what we will use as a starting point, where we will use the Palantir strategy app to formulate and backtest a quantitative strategy to trade these recurring oscillations around the moving average.
So I think it's really awesome, the work Palantir was doing. I'm really glad to be able to have shared this with all of you. It really is this crazy history that Palantir has had to end up where they are today. Obviously, there are other products similar to being able to do the types of tasks that Palantir Finance could do, such as Bloomberg, such as you could code your own, you could use Excel, you could use R, you could use just really anything you want. But it really was the beginning of Palantir saying, we're going to build a dashboard for all your needs, no code, low code in terms of generating graphs, charts, tables, and then you can put in code if you want, but also We're going to bring in all of this data from all these different locations to enable you to make the best decisions you can. So back to the question of is Palantir is able to predict the future of stocks? I don't think so, because they don't have any inside information. However, when you look at these huge trends coming together, Palantir being able to crunch the data on all of these trends, it really makes you wonder. Personally, I believe that Palantir has better ways than anyone of being able to answer the question of what probabilities are most likely for the future. So you could say, are they using this when they analyze their SPACs? Could definitely be. Were they using this when they decided to buy gold? It's definitely possible. But that's just the thing. Data is a crystal ball when you have enough of it, and when you're able to combine it, compile it, aggregate it, and sort it, and break it down in ways that lead you to the solutions, and that's what Palantir does. So I'd be very interested to see if this finance product rises from the ashes sometime into the future, because it really is amazing what it does at the most basic levels even, and how it was able to kickstart Palantir's commercial operations. So leave a like if you found this insightful and if this was the first time you had heard of it. And here's a message from Masterworks. 9 out of 11 of the S&P 500 sectors have fallen due to massive market sell-offs, and with continued uncertainty surrounding the Fed's decisions to hike rates. In my search for uncorrelated investments with strong risk-return features, I discovered an asset class that almost no one is talking about. Art has outperformed the S&P 500 by 164% from 1995 to 2021, while showing low correlation to any major asset class. Historically, when inflation was equal to or higher than 3%, like right now, contemporary art's real return was 23%, and the S&P 500's return was 3.2%. Thanks to Masterworks, investors like me and you can gain access to this market. Masterworks buys multi-million-dollar artworks by leveraging data to understand artists, markets, and trends within the asset class, and file public offerings with the SEC to securitize the painting. Getting started with Masterworks is super easy. You visit their website, create an account, and browse their artwork. And use the special link in the description to gain priority access and invest in a Picasso today.